Hi folks, it's Christopher from Student Education with the 4 majors analysis update for the 10th of February 2012. End of week and quite an indecisive week, I think, for everybody. I think the only one that really moved was the US dollar Japanese yen. The one that you would least expect to move did all the moving. Can you believe it? Let's move on to Euro. I'm just going to look at the dailies. I'm not going to go into a lot of intraday stuff, just the dailies. And you can quite clearly see on this particular pair, a lot of movement to the upside, then a pullback, and then a continuation higher. Prices the other day, after market sentiment saying that they'd actually come up with a plan for Greece, pretty much everybody got on the board and moved it higher, breaking the 13,200 mark, which happened to be prior long-term support and resistance level. And then after that, we saw an indecision candle. Fair enough, pullback, and then we wanted to see a decision. Back. As long as price is trading above 13,200, not a problem. We should be looking for a second extension. We're looking for that decision candle. Yesterday, was that a decision candle? Not really. Very indecisive in my case. In my eyes, very much a spinning top of some sorts. Price action pretty much hugging the center of that trading range. Not very decisive. And I can agree with that. A lot of people are not all that convinced about the actual Greek commitment on this particular bailout. It all seems quite rushed. People don't really know what's going on. A lot of people just aren't buying it, and the market's clearly not very decisive on this particular one. So we want to see prices moving higher. We have to see that in order for this to be a true breakout continuation to the upside. And then we can start looking at these potential targets here. Still trading above the 38.2, so there's clearly a support area through there. Price hasn't traded and closed lower than that. It's trading above that, and as long as it's going to remain above that, then yeah, we might get some sort of a momentum move to the upside. But very shallow. A lot of traders out there the market remains very skeptical about Greece's commitment, about this new bailout. So yeah, 50, got to see a break above that before we see any further attempts at 61.8 at 34,100-ish. Ideally, we should be looking at the highs here at 13,6,500 long term. If this is to remain this, to continue this way, CTC is on the daily looking favorable for further topside movement. But as I mentioned, this bailout, has it, or is it a genuine agreement? Is it something that will work? Have they agreed to all the measures that the EU and IMF have wanted? That remains, and it doesn't seem to be playing out on the charts. Over to sterling, pretty much on the up for the last 3 weeks, and then smack bang into this institutional moving average. Like before, October, November last year, capped by the institutional moving average, and price moved to the downside. Are we going to see the same thing happening here? It looks like it. Price has pretty much rallied into that and then stopped dead in its tracks. Bearish engulfing not too long ago, forming a tweezer top at resistance, and price has pretty much fallen lower. Yesterday's candle, not all that very decisive. Very much an indecision candle. Trading high, yes, during the most of the course of the day, and then during the close of US session, pretty much indecisive. And as of Asian market going into the European session this morning, far more people actually taking shorts in this position. 23.6 would be our next port of call here at 15.77 for this pair. A break of that would see 38.2 here at 15.67 long term to play out. Got to stay above here, guys. If you can stay above 22.6, then it's bound to happen. I mean, we had reattempts here. You can see quite clearly a break, pullback, reattempt, pullback, a reattempt, and then a failure. Okay, we've got to see the same thing. If you can remain above 23.6, then we're just going to see a pullback and then a reattempt quite soon. If it breaks below 23.6 with a lot of momentum, another bearish engulfing like that, then we're quite clearly seeing a change in market sentiment, and we should be looking for these fib retracement levels as potential targets for the remainder of next week. The US dollar Swiss franc here pulling back. You can see quite clearly a full week of indecision, bouncing along the support. A break below that would definitely see bearish sentiment really creeping in. Our CTC has given us the heads up. All we need now is a clear break below. A nice bearish engulfing to the downside would definitely sound the alert bells for the US dollar against the Swiss franc. And we could be looking at potentially that 86 mark, which happened to be the peg area on this particular currency pair, which ties in with the Euro US dollar 120 mark. That takes us back down to the institution moving average. But yeah, we get a clear break below, that current support and resist that support area, then first stop before we get to that 86 would be the 8900. You have prior support and resistance at this level here, which probably brings us in between the institution moving average. So 89 would be our next target if and when we get a break below that. Don't go short until we get a definite confirmation that everything's looking bearish at the moment. Yes, everything's favor for shorts. However, we're shorting into a very strong support. Price it has traded below it, but it hasn't closed below that level. Okay, so let's be honestly clear here. It's got to close with momentum below 9100. Bearish candle. Got to see something like that. Nothing like that. Nothing like that. Got to be bearish. Nice dark red low. Last but not least, the one that's been moving the most this week, it happens to be the US Japanese yen. The one that you at least expect to move is moving. Mention of intervention by a lot of the financial gurus in Japan, and after those fantastic figures that the US came out with a non-farm payroll, has really seen this particular pair move over the past week or so. Indecision going into that news announcement on Friday last week, and we got this bullish upside candle because of it, and then price has just been building on that throughout the week. This week in particular, price is really moving. Yesterday in particular, really moving with a lot of gutso, and now we're trading into this prior resistance where the shooting star happened, a ceiling level. As it stands now, I'd like to see you trading above that, but ideally above the institution moving average. You can see the shooting star here, for example, before we saw this pullback. You can see testing those areas and then pulling straight back. Same here, didn't trade higher, pulling back. That's the intervention, by the way. So at the moment now, got to see price trading well above 7,800. A nice bullish engulf and confirm that momentum is still looking favorable for long term. And if we start seeing that, then we're starting to look at potential price breaking above this all-time consolidative range here. And if I zoom out, you can quite clearly see a clear support and resistance level here at 78. We'll make it 78.50. Below that 78.50, we should be looking for consolidative upside movements. We don't want to be trading into potential resistance for price to move over. We've seen it do this for so many months. We don't want to get caught into it again. Yes, you can look for intraday trades to the upside, 7,800 back to the institution moving average. Get a definite close above this shooting star here, for example. The body of here, you can see we're trading into it. Very indecisive on the Asian session last night after a lot of momentum to the upside. Are we going to see people pulling back now, taking a bit of profit before we see another extension higher? Profit taking shall take place in and around this area. Can we expect it today or over the next couple of days? It remains to be seen. But if we get a nice bullish engulfing, breaking below above the institution moving average, it's going to confirm one thing: the price for since April of last year is looking quite good for further upside movement. If we see price reverting to the downside, there's going to be more likelihood of those gurus and those financial gurus in Japan being right, and they might be throwing some more money at the problem. That's it, guys. That's been it for the rest for this week. Very indecisive on most pairs. The US Japanese yen has probably been the only one that's really been giving us some clear movements in the market. And if you had been trading it, you'll be well in profit at the moment now, because she's moved a good 160 pips or so since Friday. And well done to you guys. For all those that are looking for trades, unfortunately things aren't really sticking out that well. We'd like to, there's so much indecision in the market. We've got to see some decision, clear movement in one particular direction, and it doesn't really seem to be there. Yes, we're starting to see a bit of it in euro sterling, those particular pairs, but it's not very, very convincing. A lot of traders out there seem to think that the sentiment out there is just not genuinely in favor of longs at the moment. Now, we do need to see something like that. And it's just not coming out of the EU and the IMF at the moment. So that's it. Have a fantastic take a weekend off. Have a great weekend with family and friends, and come back nice and refreshed for Monday. And until then, trade serenely.